following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having an awesome Thursday morning. We're going to have an awesome Thursday night. We got a webinar tonight, November 12th, 6 p.m. Hope you guys can sign up for it. We plan on spending as much time as we need to try to get all the questions out of the way and run through the latest version of the scanner, the final version of the scanner, which I know you're going to like, and answer questions. Really, I plan on answering questions as long as we have to after the webinar. So that's going to be something very glorious, I hope. Let's take a look at a stock somebody's asking about in the den in just a second. I want to get right into crude oil here because this is something we've been talking about for a while. A little bit of a divergence here, lower lows on crude oil, higher lows on Navigator. We've been talking about looking at this 43 down into 4276 area. Weekly unfair lows. We've also talked about this relative to the dollar. The dollar forcing commodities to reprice themselves in stronger dollars instead of weaker dollars, and therefore being able to even relax even farther, which is kind of amazing for a lot of these commodities. Here's the daily. We did have a daily close below that 43.11. We're at the precipice of possibly not being in the long trade right now. I'm going to call this noise. Crude oil is very noisy. We talked about your appetite for risk below 43, below 42.76. There's that 42.76 area. I'm going to pull up our scanner. I'm going to reference that really, really quick. As you can see, there's that CO1. We're at the bottom. It's just telling you very plainly, but, this is kind of Custer's last stance here. So I'm going to pull up our, and again, I'm in this trade. I've got my stop slightly below 42. I'm giving myself a little room. And why is that the case? That's because I'm looking for a big risk reward scenario and a decent pop in this. If it does pop, it doesn't look good right now, but that's what stops are for, and that's the way we're looking at it. All right, let's just reference. It's unfair, and it's a lot. Yeah, I hear you. Yeah, John from Philadelphia's in the den telling loosen the belt. Yeah, I mean, it literally, considering and basically the scanner is proving that out. Why do I have two? I have two scanners going on here. Which one's the correct one? We're going to close one of them out. We're going to see. Okay. Home. Yeah, well, we had two up. Interesting. Didn't even know that. So you can have two if you have a login, you can have two scanners or 5 scanners on multiple screens at the same time with different lists. You learn something new every day. Here we go. Task our 2 cats. Okay, so going back to our futures section, by definition, why does this thing say bottom and why is it red? All right, so what we're basically saying is we have a range in crude oil that's from 42.76, I believe, up to 49 and some change. Here it is, 49.84. You mouse over the cell and you get the inflection points. So what this calculation is, to kind of give you a noise factor based on a consistent formula, you're going to have a 10% of the height of the box noise factor. So that bottom or that top is going to show up relative to that inflection point, relative to that noise factor that's defined by 10% of the width of the box. And why do we put it as the width of the box instead of a calculation based on numerical values alone? The reason we did that is because when you have thinner boxes, your noise factor should, or less higher boxes, your noise factor is going to be, smaller. And that's by definition, you basically have a volatility range that's lower. So you really don't need that extra noise factor. When profiles are wide, it's basically saying, hey, get ready for the volatility, and therefore noise factor determined by that volatility range. Okay, so that's why this says bottom. Again, appetite for risk is what's in play here. Right now, pre-market, we're trading about 42.29, 42.30. So below that 42.76, we're about, what is that, 45.50 cents. Again, my stop's below 41. Trying to give this a little room. Don't want to give it too much. There could be quite a few people exiting, the crude oil trade from the long side at one time, and you don't want to get caught up in a $2 or $3 pullback, but that's up to you. Okay, so let me read the den here. Yeah, I mean, John, I hear you're flat oil. That's probably not a bad thing. We're just looking at a long-term divergence against this, guys, right here with our navigator. And we're also looking at, and this is a long-term play. You may want to give yourself even a little bit more room than I'm talking about. And, I think the dollar is going to go higher. That's not going to bode well for crude oil, but this is what I'm doing. No, I've not had any barbecue lately. I opted out on it yesterday. Barbecue is offered on a daily basis in North Carolina to everyone. The entire population of North Carolina has a chance to eat pork barbecue every day. But I'm opting out on that. All right, let's look at the stock that somebody threw out here. QUNR. Let's just get that out of the way. QUNR. And this is great. I mean, you guys should throw things out there that you're looking at or maybe have a position on. Everyone can benefit from the education and possibly, taking a look at that stock in general if it's something of interest. Paul, we're going to take a look at this right now. Flying Pigs, only at a Pink Floyd concert. And it's another show. That's a whole nother topic. Anyway, 35.72, that held. Okay, so that was an extremely Paul, if you're trading this, you must enjoy the volatility. You have to. So here we go. As a trader, that's what we desire. So here we go. So as we came back down into that weekly unfair low for a retest, that daily unfair low at 37.92 and 35.72, you're going to have a kind of a DMZ, if you will, there. That is going to be a collection area, in my opinion, for longs. When we broke stride, this is our weekly chart, closed above. All bets are off on the short side on the long term. Let me restate that. When we break and close above on the weekly, above weekly profiles, all bets are off on the short side unless you're willing to do a contra trade against that trend. All right. This is a sea change event when that happens. Now, all this volatility up here, you've got to drill down into the lower term time frames. All right, so as we do that, we're looking at the daily to kind of regulate that trade up. All right. You guys seeing my chart? Just making sure. Everything? Damn it. Yeah, okay. All right. So as we look at this, in my opinion, if you're going to trade this, you got a DMZ down here. You can place stops below. And that means below that 37.92 down into 35.72. It's about a $2 range. If you're trading this on the short term, in my opinion, you're not selling resistance on your 240s at 42.05. You don't have really a lot to hang on to here on the daily except for this DMZ down below. But the short-term trade collection area is still down into that DMZ. So if this is a volatile stock, it's all over the place. In my opinion, you've got to be willing, just like yesterday or the day before, we got down into 36.39, which was in that DMZ. Again, your stops below. I'm not a big fan of trading this on the short side, so it's got to be kind of a long opportunity. And short-term breakouts are above 42.05. The buy support's between 35.5 up to 37 and some change. So that's the take on QUNR. Thanks for putting that on everybody's radar screen. Wasn't aware of the volatility of that one. Let me look back in the den here just to kind of let me look at let's see, what is it? USJY, Japanese yen. All right, let's take a look at the yen really quick. All right, so this is very cool, and this is kind of what we were hoping for. You close above and you go back and retest. You close above, see change event, you go back and retest. That retest low this week, 122.74, unfair lows, 122.53. So we've gotten very close in the neighborhood of the retest. Not happened exactly yet, but again, you got a wide box. Remember, the noise factor is going to increase based on a wide or tall box. Then, therefore, you've got to be willing to kind of play around with some of the levels. And we talked about yesterday, in fact, new box attempting to appear, a little bit of an intermediate situation, 122.60 combined with that 122.55. That's a big support area for this. And I'm a huge fan of going long the yen with stops in force. I haven't been a big fan of going short this ever. I think you got an opportunity again. And by the way, I think the dollar's going to rally, which is going to bode well for this at the same time. So that's the situation on the yen. Yes. The answer is yes, Peak D. All right, so let's take a look at ORLY. I'm sorry, ORLY. Okay, here we go. Okay to be long, not okay to be short. That's the first thing I'll say. This is a weekly chart, and again, recently has broken out. And this type of flag consolidation deal, believe it or not, is another continuation pattern just from a classical technical analysis standpoint. All right, this is our daily. This is the regulator of that weekly, 264.98. That's your support on it, initial support. But the good news is, and you got this 258.49, that's going to be kind of a first 10 of a breakdown. But what you're going to have to do is just continue to look at your weekly. If you're in this on a long term, I don't see a lot of reasons to take it off. That's my first thing. If you're looking to play around this on the short side, not there yet. We're going to talk about this a little bit further when we come back from break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Going to finish up about O'Reilly Automotive. And gapping down this morning, hitting 64.50, just opened a while ago pre-market. So 264.50. So what were we just talking about? You got 264.98. Profile appearing below price action is extremely bullish, by the way, and sometimes they act as a magnet in a temporary state. So we've got, and these are little innuendos. We'll talk about some of these on the webinar tonight. But 264.98. 264.50 opening up. I think you've got to take a shot on the support side on this. This has obviously been a stock that's just been a runaway freight train, but you got to look at this too. There's a ton of people short this thing. There's a lot of people out there that are playing around with it, with the concept that things on their highs are too high. Things on their highs go higher, folks. Look back at this stock. Let's say if you played the short game, you know what? We're going to have pullbacks in it, and we're going to have pullbacks relative to support, and you got to keep turning the rents the same way until you are told differently by way of the profiles being breached. All right. So here's some situations on the daily on O'Reilly Automotive. We found support. We've had a couple of breakdowns. Here's one where we, kind of had a new profile. This is very bullish relative to this one. New profile. That was time to take some off the table, and definitely had a breach here. But again, I think you got to buy support when it's offered. And right now, 264.50, 264.98, not a bad place to start looking at this. From the you got another support line at 258.5. Below 258.5, we'll probably start seeing some new weekly profiles appear, and that'll be a little bit of a sea change event for the stock in general. But right now, it's a $275 stock. You're having a little bit of noise on the downside, 264, 265. Again, a lot of people short this thing. All right, let's see here. Let's keep going down the line. If that makes any sense. And who asked that question? Was it Paul? Who asked the or? Okay, Peak T. Gotcha. I hope that helps. If it didn't help, please tell me that also. All right, let's take a look at the S&Ps. We've gone through a couple of stock picks. This is great. I mean, you know, when you guys throw things out from the den, not only is it an individual, you know, possible win to get some dissertation on it, I think it's a great time for everybody else to kind of get a little bit of education relative to what we're looking at on the profile side. That's, in my opinion, always good. So let's take a look at the S&Ps. All right. This is obviously looking a little heavy. We're back down to our, you know, we talked about a big support area on the intermediate around 2063. All right. So as we go into the dashboard and we're going to look at our breadth situation, we've obviously got a mixed bag here. And the long-term weekly is still in go-go north mode. And that could possibly mean that 2045.5 that we kind of closed above and retraced into before on the December contract may be a buy support situation again. But let's just talk about this because we're sitting at a precarious situation. We're trading 2064 right now pre-market. We've been in that noise zone. I'm going to go to my scanner and show you what's going on here relative to the scanner. Going to my futures section, and there's that crude oil bottom. And there's that bottom on the daily, okay? Lo and behold. I don't know why that came to mind. I have no idea what that means, lo and behold. Huh. Maybe somebody can look that one up too. This is our daily. What's that? They actually have a show on History Channel now that's slang something. It's kind of cool to watch it, where all these phrases come from. Lo and behold. Haven't seen that on there. Have no idea what it means. So when we have that bottom on the daily, it's going to obviously be indicated there. We're trading a little, you know, slightly below there right now. This is got to refresh, but you know, long-term trend still above profiles, but looking very heavy and relative to that breadth situation up top, kind of mixed up. 60s are kind of telling short-term traders this may have some follow-through, but you know, right now we've done the sympathetic bounce off of this inflection point. We caught about 20-25 points off of that, which was cool. And the mixed breadth is telling us at this stage, I hear the music, we're going to come back and we're going to talk about what's in store for the future for the S&Ps.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were finishing up with the S&Ps, kind of sitting around that 2063 precarious area. I don't like the way this thing has come down and revisited it again, but and we've kind of, we talked about, in fact, yesterday about this 2086, 87 area being, what, we got to bounce. Breaths are mixed up. Time to take it off. Short-termers may have a chance to do a contra trade short or south against this. This has traveled literally approximately 25 points? Approximately 25 points in a matter of less than 24 hours. So that's, not very bullish that we're just kind of, not consolidating up here and wanting to move higher. In my opinion, we could go lower here. You could take a shot based on the breaths being mixed up and the long term still in your favor on the weekly. And I'm not opposed to doing that. I'm still not a big fan of shorting this until we get a daily close below 2063. Then we could, start kind of retesting that area and start trying to search for 2045. But that's the take on the S&Ps. Buying the bounce here, you kind of got to blindly do something on the technical side, no matter how, kind of weird it looks sometimes. So we've got a mixed bag and on the weekly and the daily breadth. And, that's not actually having a lot of wins on the board in one direction, if you know what I mean. So trade lighter is my suggestion right now if you're going to play around with this thing, because it's not exactly as clean and clear as it should be. Let's look back at the den here. Yeah, they're significant. That's actually a good thought. That's another thing, kind of putting a couple of couple of scary things in my head about going long. I mean, when 3 magenta bars line up, that's actually a very rare occurrence. You see when that happened here, you had some, so again, that's not exactly a field day for longs. And that's why I'm saying trade light. We're a little mixed up right here. Okay, let's see. Going down the list here. IBB, we're going to take a look at that. I think we looked at this yesterday, didn't we? Yeah, Nasdaq Biotech. 326 pre-market. Here's the situation here. We've closed above. We're kind of consolidating. I still like this as a long. The market in general could drag this down just like it could drag everything down. If we start breaching 2063, that's going to be a little bit of a level that we're going to have to pay attention to. And you also have to be willing, getting back above 2063, to start looking at everything from the long side relative to the breadth. But biotechs right now, on a long-term basis, I kind of like the way this is acting. It has broken some profiles on the long term, and I'm still looking at that as support. That's kind of a decent risk-reward scenario because you've got 326 down into 322 as your noise factor here, and stops below, take a shot. I'd like to see a close below 326 if you're going to look at that from the short side, peak D. Let's take a look at the grain complex, John from Philadelphia. Let's take a look at that. I always like to move around and mess Al up when the camera shots. I'm just kidding now. He's not listening. Anyway, is anyone? Here we go. January beans. Talked about this. This has been a really nice high probability situation. We had to close below our profiles, not too far below profiles here, but we had to close at 867. That bottom was 871. We kind of went back and retested it this week. And we talked about these are I'm not a big fan of going long the grain complex, and for fundamental reasons, and now we've got the technical reasons that we've been selling resistance and selling breakdowns. Beans, peak D, monthly bars on month contracts are kind of futile, and I want to, keep the current month contract as the name of the game. So we could look at month-long contracts on the problem with grains is when you try to combine them into a continuous contract. All right, well, let's take new crop with old crop. How do you make a continuous contract? That's something I've stayed away from because it really doesn't make a lot of sense in my opinion. So that's the answer. The secondary answer, peak D on that, going back and using monthly bars. 871 is big time resistance here. Stops above on the long term. We're trading 856 a bushel right now. Here's the daily. We had that really nice situation here at the same time that weekly was setting up. And now, what do you do with it? In my opinion, if you're short, you do not have any reasons to take this trade off. Again, you've got stops above 871 on this based on your appetite for risk. And I think this thing could fall apart even farther. I mean, beans don't have to be on sale. I mean, I was last night, had dinner with some of the guys at an elevator that they own. What's going on around here has really nothing to do in the grand scheme of things. This is not the grain belt of the U.S., but got a kind of an earful from them. They're looking for 825 on this particular contract, actually. Let's look at corn and wheat really quick. Let me see where we're at time-wise. Okay. Here's corn. Alternative feed to wheat. I mean, this is, this is ugly. I mean, this could force a lot of people out, and it would, bring a great amount of pain while it's doing that. And, there's no free lunch. I mean, I really feel like corn, beans, and wheat could continue to go south. We've been talking about that. We've been talking about do not look at some of these grain complex situations as they're on sale. Here's wheat. 506. That's been a very noisy situation. You've reached some targets down here. I fully believe we're going to hit the gas pedal on the short side below 48. I know that sounds crazy, but again, we don't have a lot of reasons here to start backing up the truck and throwing this in your kids' long-term portfolio. Let's take a look at the Hang Seng really quick. And again, guys, if you're long these grains, just make sure you put your stops in. If you're short, make sure you put your stops in. Let's take a look at the Hang Seng. We had a pretty big day here, without question. In my opinion, any breakouts above 23,000, we got to look at really stepping on the gas pedal on the long side. Let's take a look at the Shanghai really quick. From a long standpoint, I love the way this thing's looking. That's going to bode well for the U.S. stock market, too, if this thing gets some legs and starts moving north again. Consolidation pattern way up here, no new profiles appearing. You got to keep that in mind when you're looking at U.S. Market indices and trading from the future side. DAX, we're sitting right at that inflection point that we've been talking about. We came off, 10,891. We've kind of done a weekly reverse here on the December contract. What does that mean? That means that right now, okay. So the other big inflection point, 10,717. So that means that right now, if we come down below 10,717, we're going to have a dual time frame breakdown on this. We're going to have both red cells, and it's kind of okay to be short, not okay to be long the DAX. I know that a lot of these markets try to jive with each other. I'm not a huge fan of shortening the index right now. So that being said, getting back above 10,891 will kind of put back on the go-go long shoes. Japan, Nikkei. Let's take a look at that one. Somebody's asking about that. Here we go. All right. Kind of similar situation to Shanghai when it broke out, had a nice little retest there. So what do we do now? Here's the situation on the Nikkei. Got a yellow bar attempting to appear. A little bit of a breakdown on the 240. If you've been long this thing, I think you got to start looking at this as a little bit of a profit-taking situation. Because you got a new profile attempting to appear. That means new balanced area. That means new trading range. And we're probably going to be inside that trading range more than likely. And then you've got the first hints of a breakdown on the 240s. So pay attention to that. If you've been long the Nikkei, you've had a good ride. And on the short side, you may be able to start nibbling against that trend up with stops above 19,644. Does that make sense, Peak D? If it doesn't, let me know. Yellen's speaking, I believe. Let me just pull this up. Get some notes here. 9:30. Don't know how impacting that will be. Just letting you know, we got Bloomberg Consumer Comfort Index, and I love Bloomberg at 9:45. They make a lot of money. I'm one of the people that support their empire. Don't know why. Nobody does. Anyway, maybe it's because Susan Lee. Maybe that's why. Weekly, Euro, no new change, 109. What do you do with this? This is kind of interesting. 240, kind of bouncing around here. We talked about short-termers. Got to call it quits. Stops above 1.077 on the Euro. But on the daily, got a new profile attempting to appear. We talked about this. That's the clear sign. Maybe time to take a break on the short side. Let's let a new profile appear. If we continue to go south, that's fine. We've had a great run from 115, 114. This is literally 700 pips in your pocket without even hardly looking back. New profile, may have a little resting period here. That's what we were looking for, and that's what we've been talking about. ever since we recently broke down below 109. So that's the deal there. Let's see here. All right, let's take a look at gold really quick. All right, so 1081. So this is something we've kind of talked about staying away from on the long side, passing on some of the, we didn't get a really decent bounce there. 1086 kind of didn't want to get away from that inflection point. Talked about it as a temporary little chance to take a shot there as we came down, but we also talked about the thing looked heavy, may consolidate here, build KAs, as Tom would say, and it did build some KAs and didn't want to go anywhere, and this is the end result of something like that. And, the thing about something like this, can you consider it a noise factor relative to 1086? Let me show you something. I'm going to my futures section. I'm looking at gold. It's past the noise factor. As you can see there, one. Let me just pull this up. Boom. Below all profiles right across the board. Does that mean we can snap back? Yeah, but, this morning, there could be people rushing for the door, and this could continue down to $1,000 an ounce. Remember, gold can move quickly. Place your stops above 1086, 1090 on this on the short side if you're going to play that game. I'm not a big fan of going long this until we get a daily close back above 86 and 90. That's it. We could be in no man's land down here, guys. And, just to pull this up for you, there's not a lot down here. And we haven't had any divergences going on with this particular product. So you could be playing with fire if you're thinking about stepping in on the long side with this right now. We had a caller last week, or week before, 1106, was asking about, is it time to go long? Talked about 1099 was little bit of support, and then the big support was 1086. Now that's broken, and we talked about 1086 not looking good the past couple of days. It was still spinning around there. So I hope that that listener has been paying attention. Black gold, I'm trying to look for requests here. Maybe I've missed a couple. Yeah, gold period is looking sick, and I know it's looked sick for a while. We've come off what, $100 an ounce already, but this could get even more ugly. Treasuries, let's just take a look at this really quick. Swiss, okay, I'll take a look at that after this break. John, Swiss franc. Here's the situation on Treasuries. This is not good. This is a southern type situation, south move, excuse me. Profile appearing above price action. This is a bearish setup, even more so now. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back. Looking at Facebook really quick. Had a question about that. Does it ever going to go back below 100? Well, that 100, believe it or not, is that big inflection point on the bottom of the daily. We break there, we could actually flush some people out. I ain't counting on that one, though. Let's take a look at Alibaba really quick. Come off, we talked about this the other day. This might not be the best long in the world. I'm looking at this as coming off of 82.64. And, what do you do with it now? In my opinion, it's probably, the news and everything else, sell the news. It's really something that's going to have to consolidate and get some market help, in my opinion. I don't know if we're going to get a lot of super market help right now. I think long-term the market is going to go higher. But remember, guys who are long still, this is kind of Custer's last stance right now, 78.84. I think this is kind of a do-nothing right now on Alibaba. Let's take a look at the man, how about that cop that was tasering the guy and he died? Wow. Is that affecting the taser stock? So maybe somebody can point that out to me. I heard a statistic the other day too. If you a study found that you're much likely to get shot by a fat cop if you run. So just remember, if there's a fat cop, maybe don't run. But if it's in his shape cop, you take all the liberties to run. Just kidding. Just seeing if you're listening. And Aztec, here we go. Again, you got big support at 45.72. We talked about 46.60 kind of having to hold. This is I just made that up. Just right there. 45.72 support on the NASDAQ. Still not a big fan of going short any of these indices in any big way. That's my take on it. Got about 2 minutes left, guys. I'll stick with Taz, Larry. It's we will not depart that far left, actually. Not right. We will not depart that far left in the future. And Larry, please feel free to call in and we can discuss stuff. I love listening to your show, by the way. Let's take a look at silver really quick. A lot of guys are in this, and a lot of guys are scratching their head, and I think they could continue to scratch their head. This is really, in my opinion, not going to be long again until we get above 14.45. It's kind of a damning situation. I think the dollar is going to go higher. This thing obviously is not acting well. Remember, silver doesn't have to be on sale. Just kind of, the long guys should probably be sitting tight on this one, unless you're just trying to accumulate a dollar cost averaging down to possibly $10. I mean, anything can happen with these commodities. Larry, for one, will tell you that. They will do things that are seemingly unheard of. So, again, let's take a look at the Aussie dollar. Got some decent news out of there as far as the strength of the Aussie dollar. We talked about not going short this because of this divergence. Talked about passing on being below profiles and talked about actually taking some shots down here possibly on a contra trade up into that 71. What is that? 71. Thank on it. Let me get that number there. Oh, we've actually already met it. 71.60, 69.70. So caught a little pop there. That was our initial targets. I'd love to see a weekly close above there on the Aussie dollar, and then we could start looking at this actually from trading from the long side up into that 74.39 area. Guys, you've been great. Stay tuned for Larry Pesavento next and all the hosts at TFNN. And don't forget about that webinar tonight, guys. We're going to have a good time. Check out tomorrow and tonight.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.